Liberation Day Part 2. So interest rates have moved up, unfortunately, quite a bit over the course of the past 4 or 5 days. And why is that happening? I am here to break it down. If you recall, April of last year, President Trump announced Liberation Day is when we were going to announce tariffs on various countries all across the world about imports, okay? And what happened? 10-year Treasury didn't know how to react. 10-year Treasury moved up. Uncertainty, fear, doubt, is this going to cause inflation? All that type of stuff happened, right? And again, it's new. We haven't had these size of tariffs in a long time. This was all last year. A lot of other concerns. Were foreign countries going to start selling our Treasury bonds? So 10-year didn't know how to react. It moved from 4% all the way up to 4.6%. Interest rates moved up about 0.5% when all of this went down. Guess what? We're having the exact same thing happen this year. This time in the form of Greenland. Okay, so today I'm not here to talk about globalism, nationalism, whether the U.S. should acquire Greenland or all of that, right? Just simply talking about how these talks affect mortgage interest rates. So over the last 5 months, mortgage interest rates have been a very stable zone, with the 10-year Treasury ranging from 4 to 4.2, spread coming down, so interest rates hitting basically like a 3.5 year low last week, right around 6.06%, according to Mortgage News Daily. Today, we're back up to 6.20. So again, we're not high by any means, 6.20. Do you know how many days last year were lower than 6.20? Like 10 days. So again, we are still relatively low. We're just not as low as we were last week. So why did interest rates move up? So again, over the course of the past few days, Greenland has been the sole focus for Trump, right? The U.S. acquiring Greenland for strategic purposes. Again, why does this affect their interest rates, right? A few reasons. First, uncertainty. When was the last time this happened, right? Second, debt, right? What is the cost of buying Greenland? $750 billion, maybe another couple $100 billion for, economic support, all of that, right? Well, again, you're talking about $1 trillion. Who is going to pay for that $1 trillion? The only way we can pay for that is the U.S. taxpayers, Treasury bonds. You issue more Treasury bonds, that's what happens. Interest rates go up. But again, we've seen this playbook before. Exact same model. And then guess what? Interest rates went up. We see a little bit of a pullback. And when we see that pullback, interest rates come back down again. So again, it's going to be volatile. Not super heavily volatile, but it's going to be more volatile than it was the last 5 months, just because, again, it is new. Just earlier this week, you had a Danish pension fund basically say that they are going to be selling $100 billion of treasuries. Why are they going to do that? Basically in retaliation. And again, $100 billion in treasuries, it's not like trillion. Our treasury market is 9, 10, 12 trillion. And remember, just last week, we already had damage control. If you don't think everything is super coordinated and everything is planned out, think again. What happened last week? Or basically, it was Thursday, 2 weeks ago. We had the government announcing that they're going to be buying $200 billion of mortgage-backed securities. Why are they doing this? To bring spreads down, right? We talked about it. It's interest rates, 10-year Treasury plus the spread. That gives you your interest rate. So we saw the spreads come down. Guess what? That brings down interest rates. Then the following week, we have a lot of Greenland talk. Kind of spooks the market. 10-year Treasury goes up. 10-year Treasury goes up, but those spreads come down. Interest rates go up a little bit. The net amount is a little bit, but not a lot. So again, very coordinated by us doing this. In reality, you're not going to see a lot of foreign countries selling U.S. Treasuries. It's going to see in the news. It's going to add some ammunition. Oh my God, that's why the 10-year Treasury, that's why traders get spooked, and that is why the market moves up. Just go look at what happened last year. You had some Treasuries get sold in April, rebought in May, rebought the rest. Foreign investment will continue to be in the United States, so you don't have to worry. So as I mentioned, we've seen this playbook play out. Could happen. We can see interest rates. Likely, in my opinion, interest rates are probably going to range in this 6.15, 6.125 range to about 6.375 range, right? If you were hoping that, hey, okay, cool, we visited that low, we're maybe going to fall that 5.75, it's likely not going to happen. Reason being is, hey, Greenland is going to be probably in the talks for a while. And again, what happened today? We had Trump announce that, hey, the tariffs on the European Union went away because he spoke with the NATO advisor, and NATO advisor says, hey, we have a different idea for how we're going to acquire Greenland. Again, don't know all those details, but what happened? When that was announced and when those tariffs were removed, 10-year Treasury went down, interest rates are going to go down accordingly. So over these next 15, 30, 45 days, however long it be, maybe it ends Friday, maybe it ends tomorrow, maybe today with the whole EU, it ends today, I don't know. But over these next 45 days, yes, the truth is the wrong tweet could cause mortgage interest rates to go up. The better tweet or an agreement can cause interest rates to go down. It's not going to be super volatile. Okay, you're talking again 6125 to 6375, but you're probably not going to see lower lows until this gets digested, until we have some more time to digest this news. So again, overall, as I talked about, how many times have we seen interest rates low? 10 days last year. So they're still good. So if you have any questions, feel free to reach out.